Welcome back. We have been speaking to the Citizens Monetary Policy Committee members of CNBC-TV18. With us, Chairman Pranab Sen, Chairman of RBI-MPC, and members Sonal Verma, Shamiran Chakrabarti, Soumyakati Ghosh, and Sajid Chenoy. Gentlemen and Sonal, thank you for your patience. Then, before going to the break, it looked very clear from what you are saying that there are enough factors on both sides. So much will depend on which way the RBI tilts in its tone. Shamiran, what's your sense?
So, Latha, I think this is a classic policy where it's very difficult for RBI to give a definitive bias. They will have to play to both sides, while they have to acknowledge that this is primarily a vegetable price inflation which can be looked through. In fact, that could
He says that it is dovish.
It need not be if it is also along with a comment that they're still very clear about reaching that 4% target, and the last mile of the disinflation process is the most difficult one. Or they could skip the look-through part and just demonstrate that through the 9 to 12 month ahead inflation forecast remaining close to where the earlier forecasts were, just to show that this is a more temporary increase in prices. But it is one of those policies where it's difficult to take a side, and rather it's better to do a tightrope walk and play to both sides.
So you would say as RBI is likely to be as neutral as possible in the tone?
I think so. I think this is a time where both the doves and the hawks should get something.
Okay. What are the chances, Sajid, that the hawks get more?
So the word I would use is not hawkish or dovish. The word I would use is vigilant, right? And I would say vigilance because still about 3 months ago, there was a belief that we were in a bit of a sweet spot. Growth was surprising to the upside. Inflation was to the downside. Now those inflation risks have all turned. And I would say there are 3 categories of risk. One is the vegetable part, which clearly is a transient supply shock. You should look through that. It can be sharp, but hopefully short. But for me, there are 2 other more enduring risks. One is the monsoon. So far, we've been lucky, fingers crossed, the monsoon has been fine. But the El Nino concerns are supposed to develop later this year. And that could have an impact both on Kharif, but more importantly on Rabi because of water levels. So that's one more durable food inflation risk. And the second is what we said about global commodities, that a lot of India's core inflation, in fact, almost all of our core inflation last year, the acceleration was global goods inflation. Now, global goods have disinflated, India's core has come off, right? Do you get continued benefit from that? Or later in this year, if you do get this rotation back to manufacturing, crude goes up, something happens in China, commodities go up, and that puts pressure on core. Not to be alarmist, these are things down the road. They will take comfort from the fact that core inflation is heading towards 5 for now. But given these risks, vegetables now, food later, commodities possibly down the line, the word I'd use is vigilant. I'd be very focused on keeping that 4% narrative going, medium-term target of 4%, and on inflation expectations. Okay. I think they were right to point that out in the last meeting, and inflation expectations get tested when you get long food price shocks.
Absolutely. So my sense is if Shamiran is neutral, you're 1 standard deviation or 0.5 standard deviation, more hawkish, to the right. Shaumya, we didn't discuss liquidity. Is there nothing much that the Reserve Bank will communicate on liquidity? One factor which a lot of bond dealers tell us is that this liquidity surplus 2.5 lakh crore is not really that much because of this NEFT 24 hours the cash is needed to settle. Actually 1 lakh crore is needed for that. So are you expecting him to say anything on liquidity?
No, I think so far the Reserve Bank has done a fine balancing act on liquidity. The issue also has been the significant capital inflows, so foreign exchange reserves buffering up. But beyond the point, I think the point you mentioned is actually very interesting point. And what happens is that currently if you look into the liquidity around 3.8 trillion is the overall durable liquidity. Government cash balance is around 1.7 to 1.8 trillion. So the systemic liquidity is around 1.9 trillion. Now out of that, the general perception in the market is that a large part of that, maybe around 70,000 crores or which is basically 0.7 trillion, is actually being used up by the system in terms of a precautionary motive because of this 24/7.
Precautionary liquidity.
So that means that if you take out that 80,000 crore, the total liquidity actually comes to 1 trillion, and when against the RBI mandate of around 2.5 to 3 trillion. So in that case, we are actually running a liquidity which is almost neutral. So that actually, so that begs the question of which we have been raising for the last several meetings in terms of change in stance. But here also there is, I'll just take 1 second, there is another very interesting paper by the Reserve Bank saying that beyond 5.5%, any guidance looks very difficult to say, and beyond 6.5%, all guidance actually has no impact on the market. So if we take that as the benchmark also, which is obviously the second point which will address, is basically the stance also will possibly remain the same, because there is no impact in terms of an on the market, because market is aligned to the expectations that the RBI has built up.
Okay. Well, in that case, tell me, Sonal, what will you watch out for from the policy?
I think one is in terms of the durability of the food shock that RBI thinks
What is their assessment?
Whether it's going to impact only the September quarter number average, which they have a 5.2, the upward revision for the full year is largely on the back of that quarter. And the forthcoming quarters after that, the view right now we have is that they'll keep it unchanged. So it's a 1 quarter transitory shock. So I think whether that is their assessment or this spills over into greater than 1 quarter, in which case I think so that would be a signal. So that in turn has an implication on the average forecast for the year. So if it is just a quarter shock, then we think the revision will be from 5.1 to 5.3.
So you will watch out for the inflation revision?
The durability, of course, but that the underlying assumption here is the durability of the food inflation shock. I think second and the biggest challenge for the RBI starts now, which is that we've had this shock. We've had a great deceleration on core momentum actually in the last 3-4 months. Whether that continues in the next 2-3 months, and the next round of household inflation expectations, whether that shows that expectations have remained in check despite the food shock or not. So I think these spillover effects become quite important.
Okay.
And the final thing on growth, I think the headline growth, of course, has been holding up. But underneath the details, for instance, the exports goods slowdown is translating into services export slowdown. The consumer numbers are not that great. And corporate results also, where you had weak sales, profitability holding up, you're now seeing even profits come down. So essentially, it's largely an investment-driven growth that we are seeing right now. So of course, aggregates are great, but I think the commentary around the, the consumption and other metrics, I think will also be important.
Yeah, I'm sure there are data on both sides in terms of growth. What would you say, Dr. Sen? Do you think the Reserve Bank would fear at all that inflation can become generalized? I mean, I'm moving away from growth to inflation. It is food now. Will they have the fear that it can get generalized?
Interestingly, the one thing we haven't talked about is the trajectory of what's happening to our fiscal numbers, right? One of the big surprises that came out was that in the first quarter of this year, the government spent 25% of what was budgeted. I don't know if people realize how extraordinary this is and what the implications are. Usually in the first quarter, the government spends somewhere between 35 and 40% of the budgeted. Second, third quarters, everything goes into doldrums, and then it picks up in the last quarter. Now, a 25% spend in the first quarter, to me implies, and I'm sure some of the MPC members will be picking this up, means that the government is reserving its ammunition for period closer to the inflation. Whether that's going to be in the second quarter or the third quarter is tough to say, but it's coming. And you are likely to see a certain degree of fiscal adventurism going on around that point in time. And that's something the RBI will have to keep in mind and make sure that that doesn't upset the apple cart. The second thing that the RBI will need to keep a track of in terms of the way they think about the play out of the FISC is that the big difference seems to be the government paying off its liabilities to various suppliers of various kinds, and deferring them. Usually those are deferred to the first quarter and paid out. This time, it may well be the case that the payout is going to happen in the second quarter, right? So all of a sudden, you're going to get a fairly sudden injection of funds into the household budgets. And that can, again, be very unsettling. So frankly, it's not just the food inflation today. It is that we may actually get a sudden injection of liquidity, of expenditure from the fisc, which can actually aggravate the problem. So at the moment, I would hesitate to be really balanced between the hawkish and the dovish. If I was talking, I would tend towards the hawkish, not excessively so, but hint towards that.
I mean, definitely the Reserve Bank will have on its mind that there is an election coming and there could be some changes in revenue expenditure and reduction in capex. Certainly that calculation will go in, but it will be interesting to see what they say about it. Time to vote. The first question obviously is what should the MPC do to rates? Sajid?
On hold.
On hold. Saumyo?
Pause.
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 Sonan?
Pause.
Dr. Sen?
Pause.
Okay, so it is going to be pause. I think that's not a surprise. Let's see if stance will change at all. Sajid, the stance is, a removal of accommodation. Does that change?
Retain the stance, withdrawal of accommodation.
Withdrawal of accommodation, sorry.
Stance
Withdrawal.
will remain unchanged.
Okay. Stance?
Yeah, retaining the stance.
Retain withdrawal of accommodation.
Retain.
Okay, retain stance. Dr. Sen?
Neutral with a hawkish bias.
Okay, all right. So there is a 4:1 over there. But I think now, since there is so much uncertainty, I want a very quick third question. When do you expect the first cut?
Too much uncertainty, but I would say early 24 at the earliest.
Okay. Saumyo?
There is a lot of uncertainty on the ground, but not this fiscal year. Next
Not
fiscal
this. So April 24. Samiran?
Same with us, first quarter FY25.
April 24.
We have it in Feb 24.
Feb 24, a little earlier than that. Probably Sajid is hinting at that. Dr. Sen, when do you think,
I
sir?
think we are unanimous in probably late
2024.
2024.
But would it be early? February, April, you want to choose?
I would probably think it would be after the budget is presented.
Okay, so February. Then in that case, it's 3:2 in favor of a possible February cut. Thank you very much for watching this special broadcast of the Citizens MPC.